Hey everyone, welcome to episode 39 of Great Quarter Guys. I'm your host, Andrew Cox. I've got my two best friends with me here, Mr. Kevin Hill and Seth Holm on the line as well. We're going to have a great show for you today. We were back off a 2-week break. Sorry we didn't come back last week. I was on vacation and I kind of just messed up the coming back on time. So here we are though, episode 39, the big one here. We're going to keep going with our ode to highly questionable with our sí or no, and then we're going to get into some very interesting debates here. We're going to talk about when are the trucking bears going to throw in the towel. OTVI climbed to another mile marker today, through 14,000 for the first time. There's been a lot of discussion on LinkedIn between data scientists and some FreightWaves people. We're going to get into those a little bit and talk about if it's time for them to throw in the towel. Then we're going to talk a little bit about Uber Freight. They had some earnings came out last week, talk about their plans for an investment. They're trying to raise $500 million. We'll talk about that valuation for a second, and then we'll get into my favorite topic of the day. We're going to talk about rockets. SpaceX had a successful Starship Hop last week, and we're going to talk about that. I'll even show you the video for anybody that hasn't seen it. It's only a minute long, so it'll be very fun. But let's hop right in. So we've got our ode to highly questionable sí or no. We're going to say you care or nah. I'm going to throw it to Seth first. The first one is Google announced its workforce will be working from home through summer 2021. Seth, you care or nah?
I care. I think, because tech companies seem to all do the same thing. I think that means a lot of people are going to be working from home. And one really prominent company announced that you can just work from home permanently. And I'm forgetting who it was. You might know, Andrew. But I think we'll see more of these announcements. So I do care.
Kevin, you care?
Was it Facebook that announced that?
I'm not sure who said who could work from home permanently, but I know Google extended through the end of next summer. So you care or no?
I do, because everyone else will follow along. I think it depends on how the fall goes. But I think that the trend right now, and what I would say is that everyone's going to follow along, and these tech companies will be out, and a lot of other companies will be out until at least summer of 2021.
Yeah, I care too. My only point here is that I saw this tweet from someone that talked about the proprietary knowledge that big tech companies have, especially one like Google. So if somebody with that much knowledge, that much data is extending this thing, you got to know that they'd probably know something we don't. So yeah, I care about that one. Here we go. We got another Walmart partnership. They're just coming string after string. I'll start with you, Kevin, on this one. This time it is Walmart and Instacart. They've teamed up for same-day delivery of groceries. They're going to try to fight against that Amazon and Whole Foods partnership. You care or no?
I do, yeah, I do. The more tech partnerships they come up with, I think they're valued, or they were valued a couple weeks ago at 0.7 to revenue. Mm-hmm. If you can get that up to 1.2, 1.4 in revenue without any growth of sales or everything else being equal, then you've doubled your equity value. So I do care about this.
Seth, how about you, man? We're both long Walmart. You care about this partnership with Instacart?
Yeah, for that reason, I do care, and I just like to follow the space. I use Instacart with Publix a lot, and what we like to do is you can have an employee that's actually a Publix employee go pick up your groceries, and then they just bring it out to you in curbside, and I don't have to pay the $50 delivery fee. But just valuation wise, this might be a bigger deal for Instacart signing up Walmart. But I do think Walmart gets 50% of their business from groceries. And I think this will help, fend off Amazon and sort of continue to grow that business. So I do care.
Yeah, I also care about this one as well. Not only because I'm long Walmart, but also because in years past, for the past decade, we had seen that Walmart had been buying. They'd been doing a lot of acquisitions rather than partnerships, and that's really changed structurally over the last few months. In 2020, they have been all partnerships: the Shopify, the Instacart. I know there's another one I'm forgetting, but I like that. I think they've already got an established base with their huge stores and their massive logistics platform. I think where they're not the best at, they should just partnership rather than try to build it out and buy it themselves. Okay, number 3, Airbnb. We keep hearing the rumors that the IPO is potentially coming. They've now confidentially filed, I think, recently, I just saw this on CNBC today, for a potential listing by the end of the year. Seth, you care about this one or not?
I definitely care. I've been watching this one for a long time. I think this would have been a monster IPO if COVID hadn't have happened. I think they probably waited a little bit too late. And, obviously I think their valuation will be damaged compared to whatever the peak valuation was. But, I do think that whenever we get a vaccine, this will be a very, very large company. So I definitely care.
Kev, how about you?
I do too, and I got the Wall Street Journal alert right before we came on air, and it looks like the valuation has been cut from 31 billion to 18 billion, so about 50% haircut on that. So for the VC investors and everyone existing, that's quite a haircut. But I think it returns it back down to earth and current a more reasonable valuation. But I do care about this. I think it's I think Airbnb and the sharing economy and having basically investors buy houses instead of renting, doing Airbnb. It's spurned a lot of businesses, and I think it's the wave of the future.
Yeah, I also care about this one, not as much as the other ones. I care about it in particular because of a topic we're going to talk about towards the end there, and that is Pershing's blank check company. He's going after mature unicorns. This one is probably at the top of that list, I would assume, but we'll get into that discussion later. But yeah, definitely care about anything Airbnb does. And I got one last one for you. Seth, we'll start with you here. So we've all heard this noise really going on about TikTok and about the social media platform and the Chinese government, it being a thinly veiled data grab by the Chinese government. But Trump signed an executive order giving TikTok until September 15th to find a U.S. buyer, and if they do not, they would be shut down in the U.S. Seth, you care about this or not?
Yeah, I do care because I think it has, huge geopolitical and business consequences for a lot of other companies in both America and China. So it's been interesting. I think, now they don't want to sell to Microsoft or Twitter, I think. So it'll be interesting to see how this plays out. But China's been excluding U.S. internet companies for forever. And so this is a little bit of a tit for tat Cold War kind of thing developing. So I think you have to care and you have to watch this.
Kevin?
Yeah, I agree. You do have to care just because there's a deadline coming out by the administration to sell or shut down by September 15th, whether it's TikTok or I'm not on TikTok, amazingly enough, right?
I think you'd be good at TikTok.
I know. I could dance around a little bit, I suppose. I don't know. But it is quite, it's, Microsoft had a pull at it, Twitter might have a pull at it, and it'll be interesting to see. And it's foreshadowing for other tech companies coming out of Asia.
I think two things are interesting. One is so they also shut down. It will also shut down WeChat, which is like it is China's everything together. Their Facebook, their Twitter. I mean, everything runs through WeChat. So if that is shut down in the U.S., you have a lot of Chinese Americans that will now have no contact. As Seth said, the Chinese don't allow their people on Facebook or Instagram or Twitter or whatever. They have their own versions of it. And if the Americans can no longer get on WeChat, you just have populations of people that can no longer speak to each other. So I think that's a big deal.
It is. I totally forgot about WeChat and Tencent, who owns WeChat.
Yeah, what would be? I think they had to walk it back a little bit because originally they said any Tencent-owned entities, and Tencent owns, I think, 30 or 70% of Epic Games, who run Fortnite, which that would have been crazy for all the people that play games. So I think they've had to deal with that a little bit. But yeah, I'm interested as well. I also think it'll be really funny. It seems Seth has said that Twitter, they're no longer interested in selling to Twitter, but what would have been hilarious is if in 2017, Twitter bought Vine and then shut it down, and then 3 years later they turn around and spend 30 or 40 billion on TikTok, which is just a new age Vine. That would have been quite ironic. But all right, let's hop right into our big discussion, which is about the trucking bears. I'm going to let Kevin take the reins on this for a second. As I said, the LinkedIn debates have been heated over the past few weeks, and a lot of the bears have been arguing that OTVI is somehow wrong or doesn't really tell the full story of the market. Kevin, can you give us some more color on that? What's the disagreement in?
I can, and it's unfortunate news on TikTok for Wayne Craig because he's a truck driver influencer out there. He works for Dart, and he's very concerned here in the LinkedIn comments. But Dooner is soothing things down.
That's good. Thanks, Dooner.
Talking him off the ledge. But so there's been some LinkedIn comments and kind of talk. You have your bulls and bears, just like any other market. Bulls and bears, they make the market go. So you have to have the people who are positive and people who are negative. And I think it's a tale of two markets in a way, because OTVI has been skyrocketing up. I forget what it is today.
Yeah,
it's over 14,000, which is getting close to 40% year over year.
Yep.
But I think you have a tale of two economies and two data sets too, right? So the tale of two economies is that consumer, non-discretionary consumables are really up, right? They're really up. There's no travel going on. There's no vacations. There's no hotels. Or if there is, it's down like 95%, right? So all of that money is cycling into home improvement, into electronics, into those things that we buy on a constant basis. So we're taking those dollars we spent for travel or other things, maybe restaurants as well, and forking them into that. So you have that economy. Then you have the industrial economy, which, so in some respects, is the data is just not the traditional data that people use. Government surveys, economic numbers really haven't caught up. We know that auto manufacturing plants are out. Things are humming back along, but at what levels? So it's really about people have questions about the tale of two economies and two data sets, right? Because we have Sonar OTVI, which is in near time. It's from yesterday. We have really good visibility into it. Government economic data, survey data, anything that's compiled is probably, even CAS data, that's 6 weeks old, right? Just because of when the invoices go out, when the surveys go out, and then you have to have time for the data scientists and the statisticians to model that and write a report and actually publish it. So that's kind of a recaps of the tale of two economies.
Yeah. So let's break down some of these sonar, some of these FreightWaves sonar data sets. As you said, OTVI broke through a new record again today, passing 14,000 for the first time. It's at a 3-year high in its history. OTRI, our outbound tender rejection index, carriers are rejecting freight at a super high clip. It's over 20%, even though it's kind of walked back over the last few days, but it still remains really high, which means carriers are exercising those options and really looking to the spot market or looking elsewhere for freight. They're not just accepting their contracted freight. And because of that, they've pushed up spot rates. DAT spot rates are now above their 2018 and 2019 comparables, sit about 190 per mile. And all of this gets baked into the DHL supply chain pricing power index that Seth and I write each week. And it's now at a series high, which is 80. 100% would be, or 100 would be the highest that it could possibly go. It's at 80. And as a result, Seth and I can talk to you about the trucking stocks. They've been performing really well over the last few weeks. But I want to pass it to Seth. You after hearing all these data sets, you keep up with this a lot. What do you think? Is it time for these bears to throw in the towel, or do you think we're reaching a peak soon and they're going to be sitting pretty in a few months?
Well, first of all, I would say one part of the debate is, we all know this, our outbound tender volume index includes not only accepted loads, but it includes tender rejections. So anytime you get a big jump in tender rejections, like I think they were about 5% last year, and now they're at like 21%. So you've got 16% more tender rejections counted in that baseline comparison. So we know that so the number is artificially inflated. So I guess I get where bears are coming from, and that number is a little bit inflated. It may not be actually 37%, which I think I checked before I came on here. It may be more like 30%, I think, based on some rough math, but that's still a really strong number. And like you said, Andrew, the money, if you follow the money, trucking stocks are up huge. I mean, you look at U.S. Express and Dasky last week were up 30 or 40% each. All these trucking stocks are on fire. UPS and FedEx. UPS is up 50% in a month or something like that. So, I think directionally it's accurate. Now, to get a true read on, organic load volume growth, you would have to remove those tender rejections. But no, I think that, unless we get, I am a believer that the stimulus has really supported the economy. So that's got to stay. Whatever this back and forth going on has to be settled and has to be, the new alternative cannot be go from 600 extra a month to, that 70% of your income being replaced. I think that'll be a big headwind if that sort of bearish scenario plays out. Otherwise, I think you've got macro data and the economy is getting a little bit better. I do think we'll have a vaccine. I don't want to make predictions, but in the next 2-3 quarters. And so given, the tightness and capacity we're seeing now with over 20% tender rejections going into bid season, I think things look pretty good for trucking.
I do too. I think the PPI, the long-term or long-distance truckload volumes I saw on LinkedIn are starting to spike up, right? And that is a lagging indicator, at least 4 weeks, probably 4 to 6 weeks. So you're starting to see contract pricing come in. I remember in 2018 when we got to these levels, and some equity analysts were saying that truckload stocks or truckload carriers should just be asking for 5 to 10% increases, right? And you saw that chatter all over the place.
You feel that coming now?
I think so. I think that's the next, or maybe the final shoe to drop. Once we start hearing that, then we know that the Bears are going to be throwing in the towel, and we are going to be off to the races because there's contract. Contract is 80% of the market, 85% of the market, whatever that number is. It's a very large percentage, and once that is capitulated and shippers are just accepting those rate increases, then that's basically the final stage.
Yeah, I'm glad Seth mentioned a couple of those companies that's run up so much, at least on the stock market, so to say, because we did that report last year. It was trucking stocks trade on spot market, and spot rates have been coming up, so you see the trucking stocks trading up as well. There's another Passport Research paper that I want to get to now, and this is about Uber Freight. Seth, you guys helped out on this with JP's team, and this was gaming out the Uber Freight sell-off, or gaming out the Uber Freight investment. And we'll talk a little bit about Uber Freight earnings first, and then we'll get into that $500 million investment they're seeking. But Uber announced Q2 earnings last week, and we got a little bit of a look into the freight business. Freight revenue came in at $211 million, which was about $13 million below expectations. It was also a major deceleration in growth, which I'll let Seth really talk to here in a minute. EBITDA came in at negative $49 million for the quarter. So Seth, overall, what do you make of this quarter? Is it as bad as it looks on paper, or there's some good read-throughs here? What do you say?
I think it's a little bit mixed, but there's no question that growth is slowing at Uber Freight. We were kind of looking through that little just basic model that we've been keeping track on Uber. They started disclosing their numbers in 2018. And so if you look just on a year over year basis, in the second quarter, they grew their gross revenue by 26%. Just to put that in context, last year in the second quarter, they grew their revenue by, 120 something percent, Andrew? So
yeah, correct.
And then sequentially, so revenue actually was down quarter over quarter sequentially for the prior 2 quarters compared to this one, and it grew very modestly. And meanwhile, the losses actually haven't moderated that much. Now, the peak loss rate was they were burning $80 million a quarter in adjusted EBITDA, and I think the third quarter of 2019 they've got that down to $50 million. That's a good start. So you're talking about instead of 300 some odd million in cash burn, you're talking about 200 million, but that's coming with a lot of slowing growth. So, and as far as the valuation we talked about in the report, the rumored valuation is $4 billion. Just to put that in context again, just looking through some of the analyst models, Goldman Sachs, I looked at their model, and Bank of America, we looked at theirs, and they're going to do about $1 billion in gross revenue this year in 2020. And a lot of these analysts are projecting sort of a 50% compound growth rate for the next 3 years. Although that, to me, kind of looks a little bit high after this latest quarter being only 26%, unless they want to turn back on that burn rate. So, a $4 billion valuation, which was rumored for that $500 million pipe, that'd be 4 times gross revenue. So to me, that looks pretty high for given the decelerating growth and still a lot of cash burn.
Yeah, you guys okay?
I don't think the valuation's caught up with the pivot to profitability, right? You're going to pivot, you're going to slow growth. Mm-hmm. I don't think you can get valuations of 4 times gross revenues as you're slowing down growth to increase profitability. So you're going to have to get valued on something else besides that supersonic growth.
Yeah, maybe earnings at some point.
Earnings, yes, I know,
that would
right?
be nice
so
if they get to that
would.
Point,
so I don't know if this is an inflection point and that's what we're seeing is kind of that peak or that arc of cash burn and headed back to profitability. That might take 2 or 3 quarters for that to show up on an arc.
Seth, did you add something there?
Yeah, I was just going to add, so if you think about it being valued at 4 times gross revenue right now, in the report, we used, just a couple basic comps. We used JB Hunt, Echo, and CH Robinson. And, those traded an average valuation of 1 times gross revenue. So you've got three turns of EV to gross revenue in between them and the competition. And at this point, they're not growing that much faster than those other guys. Those guys are going to start to grow again, especially if they're able to renegotiate contract rates upward with the shippers, and they've get spot market activity picks up. Those guys are going to start to grow again. So that the disparity in terms of the growth is really, really narrowed between those guys. And meanwhile, you've got a 4 times higher valuation.
Yeah, so trying to make sense of this crazy valuation. I think Bank of America has it based on 2022 earnings of $2.3 billion. They put a 3x multiple on that, so they valued it at almost $7 billion in 2022. So some really big numbers from a company that I think in our Passport Research piece, they valued between 1.4 and 1.6 billion. So everybody go and check out that piece if you are a part of Passport Research. It's again titled "Gaming Out an Uber Freight Deal." So let's move on to the segment that I am excited about. We're going to talk rockets. Being the futuristic, optimistic person I am, I'm really excited about the future of commercial space travel and space tourism, and it's going to take a lot of different forms, and that's what we're going to talk about here. There's really not all that much to talk about when I show you this clip of the Starship Hop. Other than how cool it is and how this is going to be the vehicle that will likely take us to the moon and beyond. It's also going to be used for international travel, they say. They think they're going to take people from Shanghai to New York in an hour or less, and from London to Tokyo in an hour or less. That's how they're going to, continuously get use out of these rockets, make money for these rockets. Kevin's already looking at me with a look of disdain. I'll get on to the importance of how successful this launch was after I show you the clip. It's about a 60-second clip. Cody, why don't you go ahead and show the people?
3, 2, 1.
I want everyone to pay attention at how little those ships look before they fly up, before they get out of the way of the smoke. That's how big this thing is.
Duration.
So that may not look like much, but that is the newest prototype of the Starship. That's going to be the everyday use vehicle that NASA has contracted to take astronauts to the moon. It's also going to be the one that takes that Japanese billionaire that has signed on to pay a couple $1 billion to go around the moon in 2023. He'll be the first non-astronaut to do so. The importance of that little hop really can't be overstated. That is a massive, it looks like a grain silo. I know what it looks like. But that thing just got 500 feet in the air. It's the first, I think, actually it's the second successful launch, but the first one of that size. It's going to be great. But really, I just wanted that to... Actually, I got a question for you, Kevin, before we move on. So what do you make of the launch, and would you ever get on one of those things to go to Tokyo in 30 minutes?
I would, yes. Do I think it'll ever happen? No.
Okay.
But,
Well, then I hope we stay friends for the next decade or so I can prove you wrong when that comes. Okay, like I said, so this is just going to lead us into our conversation about monetizing space travel. They're not the only one. SpaceX is not the only one that's trying to do this, although they are the furthest along at hitting goals. But another company that has done a great job hitting goals is Virgin Galactic. Again, foreclosure. Or disclosure, me and Seth are both long this company, and they're taking a different approach. They have kind of a big plane that takes a rocket up to about as tall as it can go, and then the rocket shoots off and goes up into orbit. You get that $1 million view. You get the cresting of the Earth. You get to stay up there for 20 minutes or so, and then float back down to Earth. Blue Origin's another company doing something similar. This one's owned by Bezos. It kind of just shoots a rocket up and then parachutes you back down. But in any case, I want to talk about the future of space travel, because 10 years ago, if somebody would have told me that electric cars were going to be as big as they are today, or that cloud computing was going to be as big as it was today, I would have been snatching up as much Tesla and as much Amazon and Splunk and all the cloud computing companies as I could. I truly think that one of the themes of the next 10 years will be commercial space travel. And I think Seth is on board with me here. So Seth, do you think that emerging that this one of these trends is going to be space tourism? And if it is space the play? And is it this play simply because it's the only play, or because they really are ahead of the game?
Yeah, I mean, people are going to be like, "Why are you guys long Tesla and Virgin Galactic and all these stocks?" So these are small positions. I would say that it's binary. So it's either going to probably be $100 billion company, or it's just going to be an utter failure. And luckily when you're long, they can only go to zero, but they can go up to infinity. So sometimes I like to make small bets on companies like that. And a couple things that I like about Virgin Galactic is, if you talk about their space tourism business, they recently did a launch video themselves about what their new capsule or whatever you call it is. And as Andrew noted, they actually take off parallel to the ground, similar to an airplane, and then release higher, which saves on a lot of fuel compared to what was that SpaceX thing called? It looked like a giant AA battery. But
yeah, it's called the Starship. It does look like a massive grain silo or AA battery.
That uses a lot more fuel. But from all the projections I've seen, Virgin Galactic just got a new CEO too, and he came from Disney. And he used to run the international parks division. So I think they're going to try to brand this as a Disney-esque experience in terms of taking people to space. And right now, I think they have, is it 400,000 people signed up in their backlog? So there's some early promise there, and that's a $250,000 ride. So that is, some significant revenue in there. I think things that, so in other words, and then they project that you can do it at a pretty good margin. Potentially, if you can get all those people to space and then you build your fleet and you get some scale, it could be a very profitable company. And you're really talking about a race between three players, between Blue Origin, SpaceX, and Virgin Galactic. But Virgin Galactic's the only publicly traded way to play that. SpaceX may be one day down the road, but I think SpaceX's valuation is already like $40 billion.
Yeah, it's
and
huge.
Virgin Galactic's like, I want to say $3 billion. So the last thing I would say, I know we're moving for time, is Virgin Galactic just announced they're getting into hypersonic travel as well, which you were referring to, which is basically their version of the Concorde, where you travel at Mach 3. And they did a capital raise for that, which whacked the stock recently. But so they're going to be a mixture of space tourism and hypersonic travel. I'm optimistic. We'll see how it pans out. It's definitely a risky play.
Kevin, what'd you say, man? You got any thoughts on Virgin Galactic?
I very cautionary about it, you know, and I think some of that has to do with recently watching Airplane 2 again. and seeing the Mayflower 1 try to go to the moon, and, of course, there's a mishap, and the pilot's over and out. They're incapacitated, and Ted has to land another airplane back on Earth. So... I'm not very bullish on it.
Yeah.
Space tourism, I'm sure $250,000. There's going to be a long line of people who will take that, and I don't blame them. But it's nothing I can really get excited about.
Oh well. I don't know. Maybe it's because I'm so young, and I think I'm going to be one of those people that goes up there one day. Hopefully they bring that cost way down, because I don't think I'll pay $250,000 for it. But I know a lot of people will. And we're going to get to that Bill Ackman discussion. We'll get to it next week or the week after. Hopefully Pershing doesn't buy anything before then, but that'll be a good discussion. We'll save it for later. But we got about 90 seconds to kill here, Seth. What do you think, man? You think Georgia or Oklahoma going to play football this fall?
By the way, real quick, I think before I get actually by our audience, I think I'm off by a factor of 10 or 100 on those reservations. So look it up. It may be 4,000. Anyways, I sure hope so. The Big Ten tried to do a coup yesterday and cancel college football, and the players and the SEC and some other people fought back. And I really hope there's college football. So we'll see.
Kevin, what you think? Your Sooners playing this fall?
I hope they do, but I've been short this all along, and I'm still short. I don't think that they can pull it off.
I just don't think they should rush to judgment. I mean, I don't think any decision needs to be made in the next 48 hours. And I also think they've always been better off playing in the spring anyway. They don't have to compete with the NFL. We want spring football. I think moving it to the spring where they can have a better plan ahead of them, I think that makes the most sense. And then the other question I was going to ask, if we think Iron Mike and Roy Jones are actually going to fight, or if they're just blowing smoke. I really hope they fight, but I think they might just be blowing smoke. But either way, we are on a 6-day, 23.5-hour break. We got Ben Gordon with us next week. See you guys.